Hey everybody, it's Ken Perry with Broker Knowledge Group. Happy leap year. This is your Wednesday update on leap year. So we want to start by saying happy birthday to Scott Rosevere with UMax Mortgage in California, my wife's friend from college. You're 10, which is really exciting, so congratulations. All right, let's go into, we're going to talk about housing, the current economy, and then some of the crazy compliance stuff that are going on right now. First off, let's talk housing. So the Case-Shiller data came out this week, and I usually track the Case-Shiller. It comes out at the end of every month on the last Tuesday of the month. And it came out, and what they talked about is Case-Shiller takes a house. When that house is sold, it looks at did it go up or down. And so the data this week showed that we're actually way lower than we were this time last year value-wise. Well, a bunch of media folks picked that up, and they're like, oh my gosh, the sky is still falling, the housing market's still crashing. And though, yeah, in some areas the housing market is still going down, I don't look at the Case-Shiller number to tell me whether or not we're recovering, because it doesn't do that. Let's analyze it just for a second. The Case-Shiller data is one house selling a second, a third, a fourth time. And it only compares you to that same house. Okay, so follow me on this. If you bought a house in 2006 and then it sells in 2012, they're going to go, well, that's an increase or decrease of X amount. Well, 06, obviously things were roaring, so you're going to have that decrease when it does pull in 2012. But here's a bigger fact that I want you to think about. In the last data from the National Association of Realtors, they showed us that we actually have an increase of sale properties, but the sales that are increasing oftentimes are distressed sales. In fact, for January, 35% of the sales were distressed, short sales or some type of REO property. Well, when you have a short sale, it's not going to be the greatest sale price, right? So if you bought in 06 and now it's a short sale, obviously the value is going to be down. And if you're selling now, well then obviously you're going to see that decrease right now. Does that mean that our market is tumbling? Not necessarily. Let's also factor in this. 31% of the houses sold in that same time frame were cash. So you're taking a house that was sold in 06 with an appraisal, which means it needed to actually pass some sort of qualification to actually get a loan on it, to now what you're buying in cash. And I don't know if you've seen some of the properties being sold for cash right now, but a lot of them have been thrashed by the person who moved out of them. I mean, they're pouring cement in the sink. They're taking all the cabinets with them. I mean, it's really ugly what they're doing to them. So of course they're going to sell for less than they sold for in 06 when they were nice and shiny with the granite and all that good stuff. So we expect all of the numbers that we're seeing. It doesn't mean we're tumbling. Let's go back to the number I talked about earlier. The National Association of Realtors is talking about the increases of home sales. Because what I want to know is, are homes selling? Because when homes sell, it brings homes off the market, and as homes come off the market, the values then start to rise on those properties. Well, where are we at? First off, we only have a 6.1 month supply of homes on the market. That's actually a great spot. That's nationally. It's a pretty good spot to be. So not so bad. The total on the market, like properties on the market, that's down 20% from where we were this time last year. That's pretty sweet too. Sales are up 2% nationally. So by market, it could be up more than that, less than that, but 2% nationally. So we are starting to sell homes. It's just that we're selling the ones that are, in some cases, pretty rough, and they're not selling for as much. So the housing market is seeing some sort of middle where it's not a seller's, not a buyer's market, which is great. One other thing I want to point out, I was looking at Freddie Mac's rates recently. They have what they call the average commitment rate. Their average commitment rate right now is 3.89% on their last report. 3.89%. That's 10% lower than it was in 1984. It's about 13% lower than it was in 1981 when it was 16.63% average rate. So the rates long term, if you're buying a house right now, the rates make a ton of sense. You grab that rate, not saying that 3.89 is available. Obviously, call your local mortgage broker or banker and find out what the deal is. But what I'm telling you is you buy right now, it's a make sense long-term decision. So don't be scared off by all of the stuff that comes out on Case-Shiller. Okay, enough of the housing market. Let's move on to compliance. First off, SARS, suspicious activity reports. If you find fraud in a loan file or when talking to a borrower, you suspect fraud, you're now required to report that to the federal government through FinCEN. We did a webinar on this last week. We're doing another webinar on February 23rd. The link's going to be down in the notes pages down there. So go to that or go to our website at brokerknowledge.com to get more information on that. Speaking of fraud, I've got kind of a funny one. I was doing some research yesterday on the FTC website, and that's where I kind of hang out. And so I was on the FTC website looking up different things about identity theft and related laws. Well, here's the crazy thing. The FTC controls identity theft. They're like the big regulator around identity theft. And also, when it comes to information security, that like they're the big thing. So they go out there and tell everybody you need to have policies for keeping information safe, especially digital information like websites and emails. Well, get this. I go to the FTC website yesterday. Let me show you a screenshot I took. Yeah, check it out. They got hacked. A hacker hacked into the site of the federal agency that controls hackers. You know that guy's like the coolest person in the hacker universe right now, and he's probably got to be bragging about it to everybody. So kind of interesting that maybe they didn't have a policy on how they would handle identity theft, but I just thought that was interesting. All right, another thing, the Consumer Financial Protection Bureau announced this last week that they are actually looking for consumers. They're looking for financial professionals and experts to join them on a panel to discuss issues that relate to the industry. So here's what I'm thinking. I want to be on that panel. And so we're going to run a little campaign. Maybe we'll have some American flags or whatever we'll ship out. But if you want to nominate me to be on that panel so that I could have some impact at a federal level and bring the real information off to the feds, then I'm going to put some links down below. And if you were just to go to the CFPB website, which is consumerfinance.gov, it'll give you information on how to nominate me. Or if you go to cabnominations@cfpb.gov, and that's the email you would send it to, cabnominations@cfpb.gov, you would be able to actually email them my resume and a nomination request. I just want to be on it because I think they've got a really good start at getting things done, but they need some help. And I think I can provide that. So anyway, I'm running for office, so please go in there, nominate me, hit their website like crazy today, and go ahead and write up all kinds of stuff, please, because I would love to have that spot. All right, that's it for today. We will see you guys next week. Remember that we are always doing internet and live education, and we are just booking our class for Hawaii. So expect us to roll that out over the next week, a live education event in Hawaii the first week of October. You guys have a great day. We'll see you next week.